Hey, welcome back. I want to share a new update from Redfin that was just posted on Friday. So I have an update for you guys regarding home prices, housing inventory, pending home sales, and much, much more. I also will share an update regarding rates as well because mortgage rates decreased over the past couple of days. So here's a report from Redfin. And of course, if you guys get any value out of today's video, then hit the like button. Also, consider subscribing as well. I post frequent housing market updates so you guys can be more informed. Anyways, it says for the first time in nearly 2 years, there's no major American metro in which home prices have decreased compared to 1 year ago. So Redfin looks at 400 plus metros overall, but they also share weekly updates regarding the 50 most populous US metros. So for the first time since July of 2022, there's not a single one of those 50 metros that the median sold price is down compared to 1 year ago. It says the median home sold price rose from a year ago or stayed the same in all 50 of the most populous US metros during the 4 weeks ended April 28th. The first time that happened was back in July of 2022. Nationwide, the median sold price rose to a near record high to $383,188, up by 4.8% year over year. And now here's a look at home prices really quickly here, and then we'll talk about some other trends we're seeing right now. So let's look at home sold prices. This is on Redfin's data center. And you can see this right now, it's at 383,000. 1 year ago, we're at about 365,000. So what a difference 1 year makes, right? 1 year ago, we were down by 3% year over year. Now we're up by 5%. We're also very close to the all-time record highs that was set back in June 2022. Now, something I noticed is that in their weekly update that was posted 1 week ago from Redfin, they reported that we had all-time record highs for home prices. And of course, we had all-time record highs for average monthly housing payments. But that actually must have gotten revised downward because last week, they are reporting right now that we're at 382,000 1 week ago. Now it's at 383,000. So last week, they probably did a downward revision in their data here, which is subject to revision. A couple more things I want to touch on regarding home prices on a national level. Again, we're at 383,000 right now. 1 year ago this time, we're at 325,000. So an increase of about 58,000 over the past 3 years. Now, that's number one. Number two is, yes, home prices are still increasing, but not increasing at the craziness rates we saw in 2022. At that time, we're up by 16%. And also in 2021, we're up by a whopping 19%. So the gain we're seeing right now, up by 5% year over year, is more or less in line with historical norms. It's more normal to see home price gains in the range of 3 to 6% and not 20%. All right, let's get back to Redfin's report. It says mortgage rates also continue climbing, with the weekly average rate hitting the highest level in about 5 months. High home prices and rates drove the median monthly housing payment to a new all-time record high to $2,890 per month. That's up by 15% year over year. About 1 month ago, Redfin was saying that we had this increase of average monthly housing payments really due to the fact that rates were increasing, but in fact, it's really due to the combo effect regarding home prices and rates increasing. Now, regarding rates, they actually look at weekly rates according to Freddie Mac. So they actually just announced on May 2nd, that was on Thursday, that the average 30-year fixed rate, according to Freddie Mac, was at 7.22%. That's up from 7.17% from last week, and an increase from the 6.39% we saw 1 year ago. So according to Sam Keeter, or Hater, one of those two, sorry, Sam, if you're watching today's video, probably not. According to him, he's the Freddie Mac's chief economist. He said the 30-year fixed rate increased for the 5th consecutive week as we enter into the heart of the spring home buying season. This is basically the worst time to see an increase in rates because this is a time when we get the most sales transactions overall for the year during the spring home buying season. So on average, more than 1/3 of home sales for the entire year occur between the months of March and June. So we have this environment in which rates are at these elevated levels. That will likely impact home sales, which of course will impact overall the number of closed home sales for the entire year because we tend to see a lot of transactions during this time of year. Anyways, it says with 2 months ago left in this historically busy season, potential home buyers will likely not see relief from raising rates anytime soon. However, many seem to have acclimated or got used to these higher rates, as demonstrated by the recently released pending home sale data coming in at the highest level in about 1 year. They're referencing the National Association of Realtors report regarding pending home sales. Yes, it did increase, but we're still not too far off the all-time record highs that was set about 1 year ago. So overall, sales increasing, but we're not seeing this craziness run up that we saw over the past several years. Now, regarding his quote here, we're not going to see any relief from rising rates anytime soon. We did get a kind of small glimpse of some relief regarding rates as of today, which is about 10 a.m. Pacific Standard Time on Friday. The Mortgage News Daily has not updated the rates. So this is on Thursday's rates. We're at 7.37%. I'll have my editor add the actual rate right up here for Friday. I'm guessing that we're going to be at around 7.30%, maybe a little bit lower than that by the day's end. So we'll have to see about that. Of course, when you guys are watching today's video, you will already know that. Anyways, I'm just guessing we'll probably be around 7.3%, maybe a little bit less. But Investopedia.com did update their numbers for today. They're looking at an average 30-year fix at 7.25%. However, if you're looking to do a refi, you're looking at an average rate at 7.62%, not 7.25%. Also for FHA loan, you're looking at around 6.84%, VA around 6.5%, 15-year fix at 6.40%. Part of the reason why mortgage rates decreased on Friday was due to this right here. Average hourly earnings compared to the previous month, this is March to April, only increased by 0.2%. This is lower than expectations and also lower compared to the previous month. Also, average hourly earnings on a year-over-year basis this April came in less than expectations as well at 3.9% compared to the forecast at 4%. Also, non-farm payrolls, this is a jobs report that's announced every month, came in way below the previous reading and also way below the forecast as well. And the bond market is loving this. And we're seeing the 10-year treasury note decrease because of this. And because of that, we'll see mortgage rates also decrease as well today. Non-farm payrolls. There was only 175,000 jobs that were added for the month of April. The forecast was 238,000, way below the forecast and also way below the previous reading, which was the month of March. This, by the way, is on investing.com, their economic calendar. In any case, I just want to briefly touch on this because this is the jobs market. Inflation data impacts our housing market because it impacts mortgage rates as well. So there was 175,000 jobs that were added. This is the lowest levels we've had going back to December last year. All right, let's get back to Redfin's report and talk about inventory numbers. So new listings, which is a measure of the amount of people listing their houses for sale for existing houses, was up by 15% year over year, but they're still well below the typical April levels. If you guys missed my previous video, the video right before this one, I went into great detail regarding my own analysis of Realtor.com's data. They shared that we have far fewer houses for sale this April compared to the average April in 2017 and 2019. I want to say it was around 37% less houses for sale. But based on my own analysis, looking at the rate of change, looking at the year-to-date increase of inventory levels, in other words, the increase of inventory or the number of houses for sale this January compared to April, that increase compared to the increase or the average increase looking at pre-COVID levels is up by 63%. So the growth rate of inventory levels so far this year, January to April, is up by 63% compared to the average January to April change in 2017 through 2019. I just want to point that out because we have this common narrative, and I've been guilty of this as well, that we have far fewer houses for sale compared to pre-COVID levels. So there's nothing to see here, right? But again, I'm going to be closely following the rate of increases of inventory levels this year, and I'll definitely keep you posted regarding that. So if you guys missed my previous video, of course, please check out that video because that was probably the most eye-opening stats I've seen in quite some time regarding a huge increase of inventory, up by 10% year to date so far, whereas looking at pre-COVID levels, we didn't get into double digits. It was a small increase, up by 2% during the same time frame in 2019. Anyways, take a look at that video if you haven't taken a look at that already, because the rate of change is a very important metric in my personal opinion. Anyways, let's move on here. I'll get off my soapbox. The year-over-year increase of new listings is also inflated over this time period right here because of the Easter effect. Easter did not fall into the 4 weeks included in this year's data, but the holiday did fall into last year's comparable time period. So during the holidays, it's really common to see a dip of people listing houses for sale and also a dip of contracts being signed. So because of the variances here between the Easter holidays, that's one reason why the data in today's video regarding new listings and all these other metrics here could likely impact due to the holidays. In any case, it also says here that some Redfin agents are reporting that the recent uptick in mortgage rates is scaring buyers away, and purchase applications decreased by 2% week over week. I made a video about that as well about a few days ago. They're regarding this right here. Applications for home loans decreased by 2% compared to the previous week, but was down by 14% year over year. I won't go over these stats because I made a separate video regarding that, some leading indications of home buying demand. But one thing I didn't touch on is this right here, which was updated today. Redfin's Home Buyer Demand Index. This is an index which measures the amount of real estate showings and other home buying services from Redfin agents. That was up by 3% from a month ago, but still down by 9% from 12 months ago. All right, let's look at some more metrics as well. Looking at the median sale price, again, it's out $383,000. That's only $73 shy of the all-time record highs. We basically have all-time record highs for home prices for existing houses right now. Much different compared to brand new home construction. And I just want to read this as well because this data below includes data from 400 plus US metros, and also their weekly data goes back to 2015, but it's also subject to revision. So the stats I'm sharing in today's video may be revised in their next update. Let's also take a look at the 50 most populous metros because there's some very, very big differences here. There was not a single area in which home prices decreased from 1 year ago. So prices were unchanged in Dallas. We had Austin, Texas, and also San Antonio, Texas, that were down year over year on and off for the past month or so. But Dallas is unchanged. Now there's not a single metro that is down from a year ago. In contrast, the biggest increase is actually in Anaheim, California. The home of Disneyland, that was up by 22.8%. Then we have Detroit up by 15%. Then San Jose, West Palm Beach, Florida, and New Brunswick, New Jersey. When looking at asking prices, that increased to an all-time record high to $420,450. That's up by a whopping 7.7% year over year, an all-time record high, and also the biggest increase since September of 2022. Also, like I mentioned, we have all-time record highs as well for average monthly housing payments to just under $2,900 per month. That's up by about 15% year over year. Okay, let's take a look at pending home sales and also active listings and new listings as well. So pending home sales, a measure of contracts being signed between buyers and sellers, that decreased by 3.4%. Despite the fact that new listings increased by 15.2%. So again, we're seeing this dynamic occurring where even though we have more houses being listed for sale, contracts being signed between buyers and sellers decrease. So we're seeing demand decrease, yet supply rising. If supply was rising during 2021, 2020, we would see a sharp increase of pending home sales. That was a challenge that home buyers had right after the onset of COVID, in which there was not enough houses being listed for sale. And for the houses that do get listed for sale, they just got gobbled up by home buyers left and right. But right now, a completely different dynamic in which pendings are down, even though we're seeing more houses being listed for sale and also more houses overall for sale as well. Also, they mentioned this Easter effect as well. The decrease of pending home sales would likely be bigger if not for this Easter effect. Easter did not fall into the 4-week period this year, but it did fall in the last year's comparable period. Same thing for new listings as well. That was the biggest increase in nearly 3 years on a year-over-year basis, up by 15.2%. In regards to active listings, that rose by 11.8%. So again, more houses for sale, yet pendings decrease year over year. All right, let's have a look at the measure of new listings and pending home sales and housing inventory over the past several years. So new listings have been increasing big time, and also they rose by 15.2% year over year. We still are below levels in 2022 and 21, but the gap is actually getting a little bit more narrow compared to the previous month. Regarding pending home sales, a measure of contracts being signed, it's more or less in flat with last year's levels, down by 3.4%, and also way below levels we saw in 22 and 21. Back in 2021 at this time, we had around 117,000 pending home sales. Now we only have 88,000. So a lack of contracts being signed, especially compared to the craziness we saw in 21 and 22. Regarding active listings, let's take a look at that. Active listings were increasing at a fast clip in February and March, but ever since then, still increasing, but increasing at a slower rate. We're still up by about 12% year over year. And on top of that, at least a 3-year high as well. All right, let's get back to Redfin's report and talk about the different metros, because of course, real estate is local. A lot of the trends I'm sharing in today's video are on a national level, which may be different than what you're seeing in your neck of the woods. So regarding the measure of contracts being signed, for the 50 most populous metros, there was only 10 metros that increased of those 50 compared to 1 year ago. So pending home sales increased the most in San Jose, California, up by 15%. Then we have Milwaukee up by 5.5%. Then Cincinnati, Seattle, and Columbus, Ohio. In contrast, 40 of the 50 biggest metros decreased year over year. And leading the nation is actually Phoenix, Arizona, down by 14%. Then we have Riverside, California, Atlanta, Georgia, Houston, and Jacksonville, Florida. In regards to the measure of new listings only decrease in 1 of the 50 most populous metros. So new listings increase in 49 of the 50 biggest metros. Pretty wild. The biggest increase is actually in San Jose, California, up by a whopping 53.2%. That's really interesting, right? Because San Jose, California, home sold prices up by 14%, definitely a lagging indicator. But in San Jose, pending home sales increased by 15%. By far the biggest increase of these 50 metros regarding contracts being signed. However, though, new listings surged by 53%. So I'm really curious to see what the rest of the year will look like for San Jose, because new listings right now are far outpacing the measure of contracts being signed. So new listings rose by 53%, yet pending home sales only increased by 15%. Very interesting dynamics there. In any case, Oakland, California was in the second spot. Then we have Phoenix, Seattle, and Miami rounding out the top 5 for the biggest increases in the measure of newly listed houses. All right, a few more charts I want to share with you guys, and we'll kind of wrap this video up. I just want to share this right here because this is the measure of the average monthly housing payment of would-be homebuyers. This is based on the weekly rate or weekly mortgage rate according to Freddie Mac, and also based on the median asking price on a national level. That's how they come up with these numbers here, which is just eye-opening because besides the previous week, the all-time record highs was set back in October 2023 when the average rate was around 8%. Now it's at 7.17%. So we have all-time record highs for average monthly housing payments due to the increase in home prices especially, but also due to elevated rates as well. So around $2,900 per month on average nationwide, just absolutely insane. Compare that to 2021 at this time, the average payment was actually around $1,600 per month. So therefore, average home buyers right now are going to be paying around $1,300 more per month to buy a median price home today compared to the same time frame in 2021. I mean, can you say a lack of housing affordability, right? Let's also look at the month supply. The month supply over the previous 4 weeks is at 3.4 months. And something that really caught my attention regarding this is that it's normal to see the month supply decrease during the spring home buying season. We saw that during most months, except for 2022, a small decrease, and of course, inventory surge, of course. But over the past week or so here, the month supply shot up, unlike the previous several years. So the month supply right now at 3.4 months, even though historically speaking, it's at low levels, it's at least a 3-year high as well. And also way higher compared to the 2-month supply we saw in 21 and 22. All right, a couple more slides I want to share with you guys. Over the previous 4 weeks, 30% of houses that did sold for over the seller's final list price. This means, of course, that 70% sold for at or below the seller's asking price. This is more or less on par with the same levels in 2023, but of course, way below 2021 and 2022. So for example, back then in 2022, this time, more or less May 1st, approximately 55% of all houses that sold for over the seller's final list price. Now that ratio is at 30%. Also, the share of price drops absolutely skyrocketing over the previous 1 month. The share price drops at 6.2%, easily a 3-year high right now, way higher compared to last year when that share was around 4.25%. Now it's at 6.2%. We're also getting very close to the highest levels of the share of price drops in the previous 3 years for any month, because the peak was set back, and not surprisingly, in November of 2022, when the share price drops was around 6.6 to around 6.7%. So we're getting very close to 3-year highs regarding the share of price drops according to Redfin. And of course, lastly, here's a look at the average sale price to final list price ratio. This is houses that actually have closed or closed home sales. That ratio was at 99.3%. This means for houses that did close or sales that were finalized, on average, home sellers sold their houses for 0.7 percentage points less than the seller's asking price. This is, of course, way lower compared to the craziness of 2022, when at that time the ratio was around 102.5%, which means on average, they sold their houses for 2.5 percentage points above the seller's list price. Now they're selling for about 1% below asking on average. And with that said, please comment below with your biggest takeaways from today's video. If you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, appreciate you. If you guys want a real estate agent referral, by the way, check out my website, which is realestateteamfinder.com. Or if you want to buy or sell a house in the greater Sacramento area, my team and I would love to help you. Please email me at jason@meetjasonwalter.com. Hope you guys have an awesome day or weekend, and we'll see you on the next video.